Hello, 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 and Merry Christmas. I have donned my gay apparel, and I'm still going to do my Monday market moment. And I am back. I am not pre-recording this, and I'm going to take my hat off. These are remarkably hot, and now look, I have a line across my forehead. Let's dive in. Today is December 25, 2023. And if you are joining me for the first time, my name is Jason Allen. I am a realtor and real estate planner based in Springs, California. And every Monday, I like to do what I call a Monday market moment. And I focus on a different city within the Coachella Valley that I do business in. There are a few others that I do business in, but the bulk of my business falls into four cities: Palm Springs, Cathedral City, Rancho Mirage, and Palm Desert. There are a total of 9 cities in the whole valley, and I have done business in just about all of them. I haven't gone as far south as Coachella and Mecca, but it is the same process. We're going to look at 3 charts today, 3 sources. One is Desert Dynamics. One is from Chicago Title. It goes into median list price, and then our mortgage applications will end there. All right, very quickly, we're focused on Palm Desert today. I start with single-family dwellings if you've never done this with me before. Unit sales, we are up. Now, this is comparing November 2023 versus November of 2022. Unit sales, we are up year over year. If you look just at the previous month on this chart, we're down slightly. What would that be about? I don't know, 8%. So still holding steady. Median sales price. So median is the house that's sold in the middle. Of these 45 houses, half sold above 674, half sold below. That median price is up 10%. Inventory is up only 2% compared to 2022. You can see we're a little bit higher from the previous month. Each of the last few months, we've been going up, not dramatically, and we're still off of this high in March of 23, which is actually still below what our historical norm is. Days on market has ticked up to about a month and a half compared to last year. Sales price to list price is down about a point. Basically, people are getting what they're asking. Now, not everyone. This is done on averages, so some are going over, some are going under, but not significantly off. And that's true if they've had one or more price reduction at 97% of the list price. Sales above price is almost 40%, and that's up from a year ago. So that's what's driving this number up in a lot of cases. What do I mean? I am seeing some houses go under the asking price, but not very many. Most are going at or above, and that's why on average, we're just seeing a tiny little bit off. My advice to you is if you find a house that you really like in this market in Palm Desert, you should buy it. Don't get focused on the actual list price. In other words, if let's say you paid the list price or even a little bit above, you're going to pick that up in appreciation over the next 2, 3, 4 years. What you want to focus on are what sort of concessions you can get from the seller throughout the process. These are other terms. So are you going to get to close when you want? Are you going to getting them out with this no seller in possession after the close of escrow? Are you getting any furniture thrown in? Maybe patio stuff, pots and plants from the patios and decks, that sort of thing. Month supply of inventory, 3.5. Essentially, if we had no additional houses come on the market, it would take 3.5 months to sell everything we have. Median sales price up a hair, and 47% of the houses sold within 30 days, 76 within 60, 89 within 90 days. So what that means is that we have 11% that are either overpriced, staying on the market longer, being canceled, withdrawn, that sort of thing. Let me jump over to condos and go through those numbers quickly. Unit sales up from a year ago at 31. Median sales price also up 16% over last year. Inventory is down, so down versus last year. Last year, here we go, where's November 22? We had a lot of houses, but certainly compared to the year before that, we've got more. Days on market's 43, very consistent with single family dwellings. Also, your sales to list price, again, we're doing very well. Sellers have taken the hit on their list price, and then they're covering it. They're getting just about everything that they asked for. 38, almost 40% of the houses are going at or above list price. That's what's pushing this number up. 3.5 months supply of inventory, and your median sales price per square foot is also up. That says to me that we're selling more bigger houses. And we're going to check that compared to another chart. Let's go to that chart right now. If I go over here to median sales price by segment, and these are for houses. So here's what I like about the Chicago title report provided to me by Christian and Shanna Bailey. They break them up, they break the market into quartiles based on median price. So in each quartile, the middle house sold at these numbers, and then they chart it. And you can see here where the high end is starting to sell more. Now, we're nowhere where it was here, but whereas the first three quartiles are all just sort of chugging along, not a big change here, you're seeing the bigger houses. So bigger house, price per square foot goes down just by virtue of dividing. But you're seeing that go up. So like if I jump over to condos, let me see if that's true over in condos, also true in condos. And that explains why when we go over here and we see median sales price per square foot on condos going up, and then what do we see for single family dwellings? We also see it up. Now in houses, it's not as much, but in condos, that's significant at a year over year, 10% increase, 13% increase. That's dramatic. Now, why is all of this happening? It's happening because mortgage rates are going down. This chart comes to me from Mortgage News Daily. You can find this very easily. Your 30-year fixed is going down. Now, here it's up a fraction. But look at this. This section are the number of this grayish blue section are the number of mortgage applications. This orange line is your 30-year fixed rate. They have an inverse relationship. As rates have dropped, we see applications going up. More applications means more people in the marketplace, and more people in the marketplace means higher prices. So if you are on the fence and you can afford it, find something soon, because as we go into the new year, as interest rates come down anymore, we'll have more buyers getting back in. Now, if you're paying cash, you don't care, but if you're paying cash, you want to leverage that as a tool. You want to go after the sellers that see cash as an opportunity for them not to be fighting over a bank appraisal or a loan, you getting out on a loan. But that leverage is going to diminish as there are more buyers in the market, and someone with a mortgage is willing to pay more for a property. Remember, if we get on average a 3% increase in value, just staying par with inflation, if you pay an extra 3 to 6%, you're going to pick that back up over the next couple of years. So my advice, if you really want to buy a house, really want to buy a condo, whether it's in the Coachella Valley or somewhere else in the United States, your best opportunity as a buyer is now. Now, if you're a seller and you can wait and you're not going to go buy another house, you're better off waiting. You wait until, sometime into the next year and interest rates have ticked down more, you'll have more buyers in the market. Why does that help you? Well, it means that you don't have to make as many compromises if you have more than one offer coming in the door. That's it. That's all I got today. I hate to sound like a broken record or as a salesman. Sure, I want you to work with me or someone that I refer you to, but if you're not, even if you're not, I'm objectively telling you, do not wait much longer. Have a very Merry Christmas. I will see you in the new year. As always, I am Jason Allen, and you are welcome to contact me with your California real estate questions, or if you need a referral where you live in another city. Take care.